What could trip up the EV revolution?
What could trip it up is it needs lithium, nickel, cobalt. You can manufacture the cars, but if you can't get the raw material components, you could be in trouble.
This will be battery metals, lithium, nickel, cobalt.
Prices of lithium battery materials are rising fast. Headlines talk of shortages, reliance on China, and the need for localized sources of secure, sustainable supply. Will auto and battery manufacturers vertically integrate to mine and process their battery materials as Ford did in the 1930s? RK Equity focuses exclusively on critical minerals projects in support of EV and battery producers in North America and Europe.
In this series, we will be looking into several development companies who seek to address the risk and opportunity identified by Byron Wien and Chamath Palapatiya. These videos are based on several independent research notes which you can access on rkequity.com and is for information purposes only and not investment advice. This is Equity Overview with Rodney Hooper.
Welcome to Rockstock Channel and the third in our series of individual short videos on raw materials companies that we think should benefit from the rising demand from electric vehicles, energy storage, and other clean energy technologies. In today's episode, Rodney Hooper will present an overview of Atlantic Lithium. But before we begin, I should note that Rodney and I and RK Equity have been advisors to Atlantic Lithium since last year and have equity interests in Atlantic Lithium. We have not been paid to prepare this video, and all Rodney's comments and research are his own independent opinions. Rodney and I are not financial advisors nor broker-dealers. This video is for information purposes only and should not be considered investment or financial advice. Please do your own independent research and read the disclaimer at the end of this video or on our RK Equities website.
But before I begin, I'd like to repeat why we're so focused on lithium. Lithium is the irreplaceable element in the lithium-ion battery, and thanks to exceptional EV sales in 2021, likely between 6.3 and 6.5 million units, it has become the bottleneck to future EV sales growth. RK Equity believes that the battery-grade lithium market is in a structural deficit and will remain in that state for a number of years. To reach the EV sales, ambitious OEMs need new supply urgently. RK Equity believes that advanced conventional lithium projects in mature jurisdictions have to some degree been overlooked in 2021 and are likely to come back in favor in 2022, especially projects that could be put into production before 2025. We believe Atlantic Lithium fits in that category. Atlantic Lithium's primary focus is in Ghana, with the Iowa spodumene project most advanced as part of a broader Cape Coast portfolio. Atlantic also has lithium assets on the Ivory Coast. Atlantic aims to be a spodumene producer, not an integrated hydroxide or carbonate producer. It aims to sell spodumene concentrate, principally in North America, Europe, and possibly in Asia. Atlantic trades on the London AIM market under the ticker symbol ALL and began trading in the US OTCQX late last year under the symbol ALLIF. Atlantic's market cap is around $200 million and ranks number 23 on the RK Equity scoreboard as at the end of December. Managing Director Vincent Moscola has been managing this project for nearly a decade, first as an iron ore project before making a substantial grassroots lithium discovery a few years ago. Stu Crowe, chairman of another successful lithium developer, Lake Resources, is a non-executive director of Atlantic. Atlantic currently has about $20 million on the balance sheet, having raised money at 20p and 25p last year. But importantly and uniquely among other developers, Atlantic is fully funded through to construction as it agreed $102 million full financing package with Piedmont Lithium last year. The transaction allows for a staged investment by Piedmont to earn into 50% of Atlantic's entire Ghana portfolio, including the Iowa project and the broader Cape Coast portfolio. Atlantic maintains full offtake rights for all stages of its 50% project ownership. Piedmont now owns 9.9% of Atlantic, which otherwise has a tightly held share register with Key shareholders ASOR, a South African private equity fund, DGR Global, Sumitomo, and management, including founder Vince Mascolo, owning collectively more than 50% of the shares. The current mineral resource estimate is around 23.1 million tons at a grade of 1.31, and assuming a plant feed of 2 million tons per annum, the mine life is approximately 11.4 years in the latest scoping study. Ghana is in West Africa and is a comparatively mature and safe mining jurisdiction, ranked by the Fraser Institute in line with other lithium producing and developing regions, Portugal and Chile, and above Mexico, Catamarca, and Jujuy in Argentina. Twitter's headquarters in the region are also in Ghana. The quality of Atlantic's deposit is exceptional, with a head grade of just over 1.3 and in a crystal-like structure amenable to dense media separation processing without the requirement of flotation. This is very similar to Sigma Lithium in Brazil and Core Lithium in Australia. Compared to other projects in Africa and elsewhere, Atlantic's short 110 kilometers to port is another big advantage, especially to destinations for conversion like North Carolina, Quebec, or Europe. In the hard rock lithium market, the balance of power between the miners and processors are now squarely with the miners. Spodumene concentrate prices have risen fivefold in the past year and are trading well above $2,000 a ton in the spot market. According to Atlantic scoping study, the Iowa project can be put into production for a very low capex in the region of $70 million due to its dense media separation flow sheet and high-grade ore body. Its cash OPEX is estimated around $247 a ton, which would place it in the first quartile. Payback period of less than a year and IRR of above 100% using relatively conservative $1,000 a ton spodumene price is exceptional. In 2022, Atlantic plans to further increase its resource. It's historically undertaken 28,000 meters of drilling, expansion and infill, and some of the results are still outstanding. They also have the $20 million US on balance sheet for a further extensive and aggressive drill program in the coming months. In accordance with the criteria of its Piedmont JV, Atlantic plans to complete both pre-feas and full feasibility by the end of 2022 to be in a position for a final investment decision by the end of the year, early 23. If all goes according to plan, Atlantic should be in construction in early 2023 and ready for a 2024 start of production. From a capital markets perspective, I believe there is potential for Atlantic to dual list on the Australian Stock Exchange, where listed hard rock names, particularly those in Africa, for example, AVZ and Firefinch, have been rewarded with higher valuation multiples than what Atlantic has achieved on London's AIM exchange. I expect strong tailwinds in spodumene pricing to be supportive for all spodumene developers like Atlantic, and certain lithium hydroxide futures contracts for 22 are already trading at $39,000 a ton, suggesting spodumene concentrate spot prices could rise further and test $3,000 a ton mark. In December 2021, I wrote a research report on Atlantic suggesting a near-term value of 51p based on a price to NPV of 0.8 and a long-term spodumene concentrate price of $1,000 a ton. As M&A has been very prevalent in the lithium market, I believe an acquirer with a lower cost of capital than Atlantic could justify a purchase price of 65p. Looking longer term to 2025 and steady state production, it would be more appropriate to value Atlantic on an EV to EBITDA valuation multiple rather than a price to NPV. In this case, assuming Atlantic is producing 300,000 tons a year, of which it has 150,000 tons at a cost of $314 a ton, selling for between $900 to $1,200 spodumene price, a fair value range of 83p to 179p is possible based on an 8 to 12 times EV/EBITDA multiple. Atlantic's peer group of spodumene developers, including Sigma in Brazil, has a 1.1 billion US market value. Core Lithium in Australia is at 750 million market value, and Firefinch has an implied 1.5 billion value, considering it sold 50% of the project and 100% stage 1 offtake to China's Ganfeng. I believe the most direct comparable for Atlantic's DMS-only project is Sigma and Core. Atlantic is around 18 to 24 months behind these projects on the development timeline, but has the potential to close the large valuation gap as key milestones are reached and it expands its resource size. My estimate is 30 million tons plus.
Thanks for watching this video about Atlantic Lithium. Rodney and I plan to interview Atlantic management soon and other critical minerals developers, so please make sure to click on the subscribe button to receive notification for when they are released. And if you have any questions you'd like us to ask Atlantic, please make sure to put them in the comments and we can bring them up in future interviews.